While support and resistance can act as barriers preventing the price from either going up or down, it's important to understand that these levels may only be temporary, as they can be broken. And when these levels are broken, the buying and selling forces that created these levels will shift, and new levels of support and resistance will be established. So in this lesson, I want to show you why support and resistance can be broken, and when they are broken, why these levels can flip the other way. So if you're ready, let's begin. As we've learned, support is an area where traders find the price attractive to start placing buy orders, which can cause enough buying pressure to overwhelm the selling pressure. Thus, price finds it harder to continue going down. But this won't always be the case. As time evolves, these concentrated areas of buying can start to become exhausted. And once these levels are weak enough, the price will be able to break through these levels and follow in the same downwards movement. Now, the reason this can happen is because although price is at a lower point to attract an increased amount of buying pressure, the buying pressure, in the end, may not be enough to overwhelm the preceding selling pressure to cause the price to drop in the first place. So this can happen because there's not enough people interested in buying to keep prices up. And if there is still a heavy interest coming from sellers, then the selling pressure will take over again, which will push the prices further down once the mild buying is over. Same concept with resistance, but it's just flipped the other way around. Resistance is an area where traders find the price attractive to start placing sell orders, which can cause enough selling pressure to overwhelm the buying pressure. Thus, price finds it harder to continue going up. But this isn't always going to be the case. As time goes on, these concentrated areas of selling can start to become exhausted. And when this happens, the price will be able to break through and continue in this upwards movement. Now, the reason this can happen is because although price is at a higher point to attract an increased amount of selling, the selling pressure in the end may not be enough to overwhelm the preceding buying pressure to cause the price to rise in the first place. So this can happen because there isn't enough people interested in selling to keep prices down. And if there is still a heavy interest coming from buyers, then that can eventually push the prices further up once the mild selling is over. Now, an important concept to understand about support and resistance is that they interchange with each other. When a resistance level is formed, but the price rises above the level, the recent resistance may turn into support. And when support is formed, but the price drops below it, then the recent support may turn into resistance. So now I want to show you some scenarios on why this occurs. Let's say that a trader identifies a resistance level and plans to take a short position if the price comes back into resistance. So the price comes back into resistance and the trader enters short. But to the trader's surprise, the price still rises past the resistance level to make new highs. The whole reason this trader went short was because they thought the resistance level will hold and for the price to reverse downwards. But in this instance, it doesn't. The price still ends up going up. So at this point, the trader that took a short position at the recent resistance level is now in a losing position. So now this trader is going to make either one of two decisions. The first decision would be to exit the position as soon as the price breaks over the resistance line to avoid a major loss. Or the second decision would be to hold the position to see if the price can come back down so they can avoid taking a potential loss. Now, sometimes this decision could work, but oftentimes traders find themselves in this situation where it never comes down and it rises so much that it makes it really hard for them to cover their position, which would lock in an even bigger loss. So traders who find themselves in this scenario will often make the decision to wait for the price to come back down closer to their entry price so they can exit for a much smaller loss or break even. Now, since short traders place buy orders to exit out of a trade, both instances are going to create buying pressure around this level. So because of this buying, this is what can cause an increased amount of buying pressure at the recent resistance level to make it change into a support level. Let's do one more example here, but from a long trader's perspective. Let's say a long trader was anticipating a breakout above resistance at 3 and wanted to buy as soon as the price broke out above of 3, but hesitated and missed the move. And now that the stock is trading at 4, they might feel regret for not buying at 3 like they originally wanted. But if the price comes back down to 3, this might entice them to buy, which would then create enough buying pressure to turn this recent resistance into a support level. Now let me show you a scenario that will cause support to change into resistance. Let's say that a trader identifies a support level and plans to take a long position if the price comes back down into support. The price comes back into support and the trader enters long. But to the trader's surprise, the price still drops to make new lows. Now, the whole idea behind this trade was for the price to hold support and for the price to rise. But in this instance, it didn't. The price still ends up dropping. So at this point, the trader that took a long position at the recent support level is now in a losing position. So now this trader is going to make either one of two decisions. The first decision would be to exit the position as soon as the price breaks below the support line to avoid a major loss. Or the second decision would be to hold the position to see if the price can come back up so they can avoid taking a potential loss, which again could work. But if the price never rises back up, a trader can easily find themselves in this situation where the price falls so much that it makes it very difficult for them to sell the position, which would lock in a huge loss. So traders who find themselves in this situation will often make the decision to wait for the price to come back up closer to their entry price so they can exit as close to break even as possible. Now, since long traders place sell orders to exit out of a trade, both instances are going to create selling pressure around this level. So because of this selling, this is what can cause increased selling pressure at the recent support level to make it change into resistance. Now let's do one more example, but from a short trader's perspective. Let's say that a short trader was anticipating a breakdown below the support level at 9 and wanted to short as soon as the price broke below 9, but hesitated and missed the move. And now that the stock is trading at 8, they might feel regret for not shorting at 9 like they originally wanted. But if the price comes back up to 9, this might entice them to short, which would then create enough selling pressure to turn this recent support level into resistance. All right, so that is going to be it for support and resistance. In the next lesson, I'm going to show you how to identify and draw these levels on a chart. I hope you all learned something, and I'd like to thank you so much for watching.